Today's High Performance Podcast is brought to you by Phegan Digital. It's where you'll find our incredible short courses. In under 60 minutes, you'll grow all the key skills, covering specific areas like how to hire an assistant, grow a team, to list better properties, to grow better fees, and to master your pipeline. Welcome to High Performance, the podcast featuring Phegan and Alexander Phillips. Alexander, today we're going to talk a lot about volatility. You know, we're seeing that out in the marketplace right now. There's a lot of headlines in Australia about petrol prices, about the conversations of the tension inside of the Middle East, interest rates, the conversation about inflation, maybe the whole idea that it's going to get more expensive, there's going to be less borrowing capacity. How are you providing great advisory to buyers to buy and sellers to sell, but also to do your agents in your own team about how to handle volatile markets?
Thanks, Josh. Thanks for having me again. You know, volatility is something that you can actually get prepared for. Preparing your vendors, preparing your buyers, preparing for the future and what might happen. Also looking at past trends, like, past, economic changes, whatever that might be, rate rises or wars or whatever, and use that when you're actually listing and selling properties and having conversations with vendors straight away about it.
When people see that volatility in a share market, do you think that all of a sudden then they maybe turn back to property because it's a safer investment as a part of that conversation? So that might drive that section of the market. If there's government changes on capital gains tax, does that mean that some investors sell out of an investment property and start buying more larger principal place of residences which don't have a capital gains tax component on them?
Exactly. So can actually, these changes can actually help the market or can decrease buyer pool, increase buyer pools. So you've got to get an understanding around, mentally, like how the consumer might think and take that on board on what they do. Do they pull back? Do they go a bit harder? If they're buying and selling, does that mean? Should they actually wait for the market to come off, or should they move quickly? And that's probably understanding also different markets that you work in, different price points, and using that in your conversations with everybody, which also makes you look more like a trusted advisor than just a real estate agent saying, this is what I would do, this is what it can mean to you, and actually having in-depth conversations around that will really help you, talk to people, on a real level.
So I was having a quick look at some data before, and in the Upper North Shore, for example, there are some markets where 1 in every 3 homes has been on the market for more than 90 days and is still not yet sold. And what surprised me is that if I go and have a look at Bronte, 1 in every 5 properties have actually been on the market for longer than 90 days. So would you be using that inside of a listing presentation to say to people, hey, it's really important that the agent that you choose, their sale methodology, how they work with buyers, what they do to address the volatility in the market to ensure that we, A, get you the sold, and B, maximise your sale price, is the most important decision you're going to make as a seller?
We've found this year, like, our volume has increased a lot, like as in the amount of listings we've got in our sales volume has increased. So I think a lot of agents have probably gone the opposite because we've moved really quick. So to give you an idea, Bronte in itself in the 4 to 7 bracket is off around 10% this year, just from January. It's a big decrease. But we're using that data and really quickly using it. So something sells and they wanted 6, goes for 5.2, showing that all those vendors in the marketplace saying, guys, this is what we're up against. Because, they're sort of thinking, well, you're just trying to crunch me, my property's not selling. But when you're showing them 3 or 4 properties that have all adjusted their prices, and showing them those adjustments as well, it makes them move a lot quicker. So we're using that to then, increase, our sales, but also speed up the sales to ensure that they're beating a changing market. So you can use all that data to your advantage, but also to the vendor's advantage to make sure that they're actually, beating, what's happening out there in the market.
When you start to think about like holiday and lifestyle locations, for example, like, Barra or Mittagong, maybe the conversation of like Palm Beach, even here in Sydney, near that Mornington Peninsula stuff down in Melbourne, what you're going to see is that ultimately this is probably not the environment where people are going to be buying the holiday home necessarily. And so off the back of that, with another 1 or 2 interest rates to come, it's really, really important that you make the decision to sell today if there's a great offer on the table, and learn how to have that conversation with your seller. But at the same time too, finding the buyers you actually want to go and buy. If you're in those markets, is it also too about listing what's actually going to sell? So I saw some stats the other day that properties sub 1.5 million nationally have gone up about 5 or 6%. Anything over 2.5 million has gone down about 5 or 6%. So this is about understanding if you've got like a really high level of buy demand, sub 1.5 in your market, then maybe try and list a few more of those. Doesn't mean don't do the top end, but literally have a few more of those if you think there's going to be more transactional volume. And maybe the seller at 1.3, 1.4 buys the one at 1.8 or 2, so that starts to give you a little bit of extra demand in the next price range. How targeted are you to say to the guys, that's actually really hot right now, try to get a few more of those listings on board, because that'll give us a bit more momentum, which then pushes up that next price range, particularly if you're stuck in a price range and there's not enough momentum there?
Doing more volume at price points that work keeps your energy levels high, keeps the sales turning over. It's also making sure you're putting your energy into good work. There's a lot of vendors that can drain you, and you're probably best off not having that and just focus on the ones that are selling.